Hello, this is the Daily Forex Report for March 13th. We're looking at the U.S.-Japanese yen pair first. You can see this pair gapped down at the open. It did retrace 1 pip above the previous Friday's close, but then it has jettisoned down to the downside, and you can see that it has pulled back significantly prior to that. We are looking for this pair to continue its slide to the downside. Depending on how many exits are made from the yen will determine how far it drops the U.S.-Japanese yen and how strong the yen will become as people have worries about the Japanese yen and just overall worries about the economy, and I think long term it's definitely going to have a negative effect. All the earthquake and the tsunami that has hit Japan. But I think short term, with all the unrest, people may be unwinding some trades and therefore propping up the Japanese yen. So we'll just have to keep an eye on this. It very well could close lower and lower. We'll take a look at that here in a minute. But we are looking for it to potentially go as high as 30.8368, possibly as low as 80.06. Look for some resistance around 81.55 and look for some support around 80.50. Okay, now the Euro USD pair. This pair gapped up at the open. It has closed or has moved down a little bit. Closed up on Friday. We are looking for it to potentially go as high as 141.02, possibly as low as 136.74. Look for some resistance around 14007, possibly as low and hit support at 138.32. Now the pound US dollar pair. This pair really didn't gap. It opened just 1 pip above, moved a little bit lower, closed up after a very strong move to the downside on Friday. We are looking for it to potentially go as high as 162.08, possibly as low as 159.04. Look for some resistance around 161.25 and look for some support around 160.25. Now the US Swiss, this pair closed down on Friday. It did gap about 19 pips at the open, gap down. I am looking for it to retrace that gap prior to Friday's close. It's gotten pretty close already. Look for it to potentially go as high as 0.9412, possibly as low as 0.9170. Look for some resistance around 0.9375 and look for some support around 0.9225. We have the Chinese releasing their new loans for February, showing that it has dropped from 1,040 billion down to 600 billion. The Bank of Japan is releasing their rate decision at 7 p.m. Eastern Time tomorrow. Consensus on that is that they're going to hold rates at 0.10%. Now let's take a look at the Japanese yen on the hour time frame. Let's take a look at the previous session on Friday. You can see that it started moving much lower. It gapped down, and then what appears to be a very large position was moved and dropped. Basically went into the market and dropped this particular pair by 115 pips or so within an hour, very quickly to the downside. After gapping down and retracing, it moved much lower down. This is indicative typically of someone basically moving out of a carry trade. You get an unwinding is what we see historically. An unwinding of the carry trade. You see the yen is propped up due to that unwinding, but you can see that overall this pair has been moving sideways for the most part. Not sure if we'll see that. Of course, due to the earthquake, I do believe we will see it long term affect GDP. GDP will go down in Japan, at least for a while, due to this. As far as trading it, I would just be cautious because Typically, when we get a move out of a carry trade, whatever the reason, it could be due to a number of reasons, but with the unrest in the Middle East and oil, and now this earthquake and tsunami and all the issues that come along with that, we could see people putting their money into safe currencies, the U.S. and the Swiss, and pulling, stopping some of the trades that they may have, pulling out of those, which typically leads to the yen moving very, very quick. If we go back a little bit, if you see the markets during the downturn that we had over the past couple of years, 2007, 2008, 2009, you can see that it moved down very, very quickly within those time periods. Thousands of pips basically within just a couple of months. So be aware of that, and if you notice on that monthly time frame, we've basically been moving sideways to a large degree. And you tag the highs there and you tag the low here. If we see it drop, we could definitely see it go much lower, much quicker. I guess a long-term play would be to look for it to close below this session's or this month bar low, which would basically be a break, a close below 80.00, somewhere in the 79 region, and we could see it potentially go much, much lower. You can see historically we're at some previous lows as well, so it may bounce around here and then move higher. So short-term trading, cautious, be cautious. Long-term trading, we are at historic lows, and if history repeats itself, we should be going higher. Hope that helps. Until next time, this is Jason Fielder. Good trading.